Good morning. It's Jeffrey Christian of CPM Group. It's not quite 10:30 here in New York on Friday, the 21st of July. I want to talk some about Platinum Group metals. Today, we have our Platinum Group metals yearbook released next Tuesday, and there's some interesting topics that we're adding to it this year. But looking at my schedule over this week and next week, it struck me something that I've often said. CPM Group operates in two quite distinct precious metals markets. The real one, and let's call it the surreal one. The real one consists of mining companies and refiners and smelters and financial intermediaries on the buy side, and institutional investors, high net worth individuals, central banks, governments, and they focus on what's really happening in the precious metals and commodities markets. And this week I spent 2 days at the Initiatives on Arts and Culture, had a conference on gold and diamonds. And that was a real gold market event. And it had participants in the real gold market talking about things like responsible sourcing of gold for jewelry, artisanal mining and trying to reduce the use of mercury by artisanal miners and bring artisanal miners more into the mainstream gold market, and other issues related to supply and demand. Next week, I'll be at Rick Rule's conference in Boca Raton, and there will be people talking about how gold's going to $3,000 or $10,000. There'll be people talking about how the Treasury market and the Fed are going to collapse. One guy's going to be talking about not the super cycle in commodity prices, but the hyper cycle. It's going to be surreal. And Rick has asked me to speak on the idea that the world's not about to collapse, that the Fed isn't going to fail, that inflation, in fact, is coming down. We will have recessions, but we'll survive those recessions. Real world events. It's similar to something that happened in 2008 with Doug Casey, where he had a crisis and opportunity conference in March of 2008. And there were a lot of hand wringings and arm wavings about this being the end of the financial system that's lasted for 500 years, more or less. And then he asked me to speak about an institutional view of what was going on, i.e., what's the real gold market thing? So we've always operated in those two quite distinct markets, and there's a surprising lack of overlap between them. It's just so we do. Now, speaking about platinum, these are CPM Group's intermediate-term price projections since December 1980, when we started keeping track when I came to work at J. Aaron and Company. And you can see the first thing was in early 2000, in December of 1980, I said, go sell platinum. And then we issued a buy recommendation in, I think it was the first week of 1982. A sell recommendation later in either late 82 or 83, and on and on and on. Around 2000, as with gold and silver, we issued a buy recommendation. We kept that in place until 2012. We then had a sell signal for a while. When the price got down to $1,200, we issued a buy signal, and we've actually kept that. There was a long period of time from late 2014 until 2020 when the price was trading in this $800 to $1,000 range, and we continued to say, hold this as a longer-term investment. I bring this up not because I'm proud of our track record. I am proud of our track record. We've done a remarkable job, but our price projections are based on our fundamental research and our macroeconomic research. Bottom-up microeconomic research of the platinum market by mine, by refinery, by secondary supply, fabrication demand, investment demand, inventories. And then a macroeconomic top-down, This is the economic and political and financial market environment in which platinum is going to exist. And that fundamental research has given us a very good track record in calling buy and sell signals on an intermediate term basis for platinum. That suggests to us that our research actually has been pretty accurate. If you look at our surpluses and deficits, which we use Commodities 101, surpluses and deficits are total newly refined metal coming in from mine production and secondary recovery from scrap, less fabrication demand. You don't put investment demand or dummy variables for investment demand in with fabrication demand. You want to know what that primary surplus or deficit is. And in platinum, you can see that for most of the last half century, the platinum market has been in a surplus. Platinum, refined production of platinum in any given year, except for about 7 years, has exceeded fabrication requirements. Now, in the late 1980s and early 1990s, those surpluses were absorbed by South African mining companies rather than have that metal sloshing around depressing the price. Even so, the platinum price basically traded between, say, $350 and $550 for an extended period of time into about 2021 when it started to break out. But those surpluses were explainable by being absorbed by South African producers. And you can see a big, sharp drop after 1993. 1994, South Africa changed its political system. The ANC became the government instead of the Nationalist Party. And the South African producers that had been the buyers and sellers of last resort stopped being the buyers of last resort. Fortunately for them, the Soviet Union had also collapsed, and there were interruptions in Soviet exports of platinum group metals for a time. After 2002 or so, you saw this second period of very large surpluses. Those surpluses were bought by investors. And the difference is that the price of platinum rose very sharply during that period of large and rising surpluses. When investors buy platinum, they'll bid the price up, and any number of investors will actually chase the price higher. When market makers or producers or refiners or semi-fabricators that act as agents for the producers buy excess metal that fabricators don't want and that investors don't want, as was the case from, say, 87, 88 until 96, then they don't bid the price up. The price stays flat or actually moves lower to allow them to cover the costs of holding those inventories, mostly insurance, but also interest rates on the money that you use to buy those inventories. So there's a big difference. And if you understand the market and you delve into it and you look at the fundamentals properly, you can see that CPM Group surpluses and deficits explain the price moves that we've seen in the platinum market. Really, since we started doing research on it, we started the research in 1979, and we took our data back to 1976. If you add investment demand to fabrication demand, that distorts that primary deficit picture. And you get this weird situation, for example, 2013 through 2016, where people who market platinum group metals and add investment demand to fabrication demand so they can say, oh, look, there's a deficit. And for that period there, like about 4 years, it was very interesting because you had South African mining executives saying, we don't understand that there are these massive deficits in the platinum supply relative to demand, and yet the price is falling. It's falling from $1,800 down to $800. Well, if you take out that dummy variable for investment demand and you say, what's the real market, then you had a surplus and you could understand why the price was falling. You had a surplus at a time when investors didn't want to buy that surplus. They had bought the surplus, took the price from $350 to $2,100 in 2008, and then again in 2011, and then it came off. And they stopped buying. Change your data, and all of a sudden you have these big surpluses for several years, and now you've got large deficits. But you also have these massive swings in the surpluses and deficits. You were talking about 800,000 ounces or more than 1 million ounces surplus in 2021, at a time when the price of platinum basically had started to rise in 2000, and then it came off in 2021 to some extent. Came back down into that $800 to $1,000 range. So if you get your research right, you get your price projections right. Gold prices, meanwhile, continued to tread water. I think everything is pretty much on hold until the FOMC meeting next week, the 26th and 27th. On the 27th, the Fed will issue a statement about whether or not it's going to raise interest rates another 25 basis points. The market consensus, if you look at Treasury bills, is that the Fed will raise interest rates 25 basis points again next week, and then that's it. That's the peak of this cycle of rising interest rates, according to the Treasury's market. It's probably true. What's going to really be important is what the Fed says after it issues its policy statement, because that is what the market will parse very carefully and try to decide what the Fed is saying. And the gold market, the silver market, the stock market, everybody's pretty much on hold until after that Fed meeting next week. Silver, it's the same thing. It's trading around $25 either side, 20 cents on either side of $21.5 right now. Relatively strong, stronger than we thought it would be at this point. But we're all waiting for that Fed. We will be launching our Platinum Group Metals Yearbook next week, 10 a.m. Eastern Time. We will have an online briefing. It's free. You can sign up for it at our website, www.cpmgroup.com. You can pre-order the book, our Platinum Yearbook, at that website. We won't have a standard regular video like this next Tuesday. Next Friday, I'll be en route home from Boca Raton and Rick Rule's conference. Rick's conference goes from, I think, a Sunday night reception through Thursday. I'm speaking on Thursday on The World's Not Ending, but the good news is you can still make money on gold and silver. And I've added a cautionary tale about the future demand for rare earth elements and copper in the energy transition, which I mentioned, I guess, last Friday in our video. So we may or may not have a video next Friday. If we do, it's going to be a pre-recorded video because I will be en route home for the weekend. Speaking of weekends, have a good weekend. If you have some time, you might go to our website and do some of our free readings or order some of our research reports. Look around at some of the consulting that we do. In the meantime, have a good weekend. Take care of yourself and those around you. Take care of your broader community and see what you can do to help the world. Take care.